Bitcoin is not giving investors a clean signal right now. It is giving them a psychological problem. The chart is still close enough to support to keep hope alive, but weak enough to make every bounce feel suspicious. And that is exactly where the market becomes dangerous. Not because the answer is obvious, but because the uncertainty starts making decisions for people. This is the real story behind Bitcoin right now. Most people are staring at the price, waiting for one clear candle to tell them what to do next. But in this kind of market, the chart does not only show direction, it creates emotion, it creates doubt, it creates impatience. And once investors become emotionally tired, they often start reacting to price before they understand what the market is really saying. That is why this moment matters. Bitcoin is not only testing a technical zone, it is testing whether investors can stay calm while the market refuses to give confirmation. A strong breakdown would be easier to understand. A clean breakout would be easier to trust. But this weak, undecided zone is harder because it keeps both fear and hope alive at the same time. For holders, the pressure is very personal. They are not only asking whether Bitcoin will move higher or lower today, they are asking whether they are being patient through a normal shakeout, or whether they are ignoring the early warning sign of something bigger. That is why every red candle feels heavier than usual, and every green candle still does not feel strong enough to bring confidence back. For traders, the emotional pressure is even sharper. Going long feels dangerous because one sudden drop can turn relief into regret. Going short feels dangerous because one violent bounce can erase the position before the bigger idea has time to work. And staying in cash feels frustrating because every small rally looks like the move that could leave them behind. This is how a market quietly pulls people into emotional mistakes. It makes patience feel like weakness. It makes waiting feel like losing. It makes a small bounce feel like safety, even when real confirmation has not arrived yet. And it makes one red move feel like proof that everything is breaking, even when the broader structure is still undecided. The bigger picture is that Bitcoin is not moving in isolation anymore. It is sitting inside a wider risk conversation where liquidity, ETF flows, yields, the Fed, stocks, and global uncertainty all matter at the same time. That means Bitcoin is not only reacting to crypto traders, it is reacting to whether capital still wants risk, whether confidence is coming back, and whether investors are willing to step into volatility with real conviction. That is why a bounce alone is not enough. A weak bounce can feel powerful after investors have been tired of fear, but emotional relief is not the same thing as real demand. Real recovery needs follow-through. It needs stronger buying, better structure, and a clearer sign that capital is returning for more than just a short-term reaction. So the deeper question is not simply whether Bitcoin moves up or down next. The deeper question is what emotion the market is trying to force out of investors before the real move becomes obvious. Is it trying to make holders panic out too early? Is it trying to make traders chase a weak bounce before confirmation? Or is it simply wearing everyone down until they stop thinking clearly? That is the trap investors need to recognize. In markets like this, the biggest losses do not always come from having no information. They often come from having too many conflicting signals and reacting to the one that matches your fear. A scared investor sees every bounce as fake. An impatient investor sees every bounce as the beginning of a new bull run. This is why discipline matters more than prediction right now. Bitcoin may recover from this zone, or it may fail and open the door to a deeper repricing. But the investor's job is not to emotionally guess every candle. The job is to watch whether real capital returns, whether fear starts to fade, and whether the market can build strength without depending only on short-term relief. Bitcoin is testing price on the surface, but underneath the chart, it is testing patience, conviction, and emotional control. That is the real story of this moment. Not just whether the next bounce is real, and not just whether the next support holds. The real question is whether investors can stay calm long enough to see the signal before the crowd reacts to the emotion.